Hey everybody, it's Jim Cardinal. Happy Mortgage Monday. Okay, this week on Mortgage Monday, we have a special guest, Ryan Hanley, who's joining us again. He's helped us out last time with the flood insurance.
Yep, we talked about flood insurance.
This one, it was a specific deal that you guys helped us out. Ryan handles the marketing there at the Murray Agency,
Yep.
but I was able to call there in a kind of a last-minute situation and get help on a deal that frankly probably would have not been able to close in such a short period of time if it wasn't for the Murray Agency. So real grateful. Thanks for coming.
Thanks for thinking of us. Actually, my father-in-law, who's owned the agency for 40 years, is the one that handled the business. Yeah.
Yeah, it was great. It was great. Jim jumped in, and of course Lauren was helping out.
Yep.
It was awesome. So just let me tell you a little bit about the situation. I had a gentleman set to close 2 days from the time that I contacted the Murray Group, and basically he had gotten an insurance policy for $992, which seemed a little expensive to me, but raise an eyebrow. But the biggest problem with that is the fact that his debt to income ratio was already at the max. So usually I'm figuring about a $600 or $700 policy when I'm calculating people's debt ratio, especially for a house. This house was about a $218,000 house. So
That's reasonable.
It's a reasonable number that we use. Usually that's where they come in. This one came in high, and there was no way that we were going to be able to still income qualify this person, and then the closing would have been canceled at the last minute. Had I not run into this before, and you've helped me out with it before. And basically the reason why the person had a high policy amount was because of his credit score. His credit score, again, good enough to lend, but he had some issues in the past. His score was low. So tell us a little bit about why that's a problem.
Yeah, so there actually is your credit score is included in a completely separate score called your insurance score. So there's other factors, but your credit score plays a large role in it. And companies, there's been many studies done, whether you agree with this or not, there have been enough studies done that the state of New York allows insurance carriers to use that insurance score, which includes your credit score, in rating. And if you have a lower rating, then you are going to have higher premiums versus someone buying the same home for the same coverage who has a higher credit score.
Right. So our first reaction, of course, because he is already doing business with this company, and we just called the company up and said, listen, is there anything you can do with this policy? It's too high, and he's not going to income qualify. And they said, well, let us play around with it. We told them we needed to be around $650, maybe max $700. So they wanted to play around with it. They came back. They told us that they were going to give the client a $10,000 deductible versus your standard $1,000 deductible. And boy, that number one, that just didn't make me feel too good for the client. That God forbid something happens to the house that he's going to have to shell out $10,000, $9,000 more than what you normally would have to. So that just really sat uneasy. And again, their number still was $750, which was really borderline for me to qualify him. That's what I called the Murray Group. Tell us what happened.
So what happened in this particular scenario, I'm not going to talk about the actual insurance companies themselves, but the agent the guy was currently with only had access to one carrier. And that one carrier used credit score in their rating. Now, from what I explained before, New York State allows insurance companies to use credit score in their rating, but it's not mandatory in any way. So the carrier actually has the option to use that or not in their rating. And we are an independent agency. We work with about 30 carriers, and that gives us access to 3 carriers in particular who don't use credit score in their rating. So they're looking at kind of all the traditional factors that would go in, where the house is located, the build, how old it is, some other general features. But the fact that this gentleman had a lower credit score did not play any role in its rating, so the premium was significantly lower.
Yeah, I think it came in just under $650 a year.
Yes, yeah.
And so huge savings.
With $1,000 deductible.
With a $1,000 deductible, which makes me sleep a lot better at night knowing that our client only has that. Deal's closing. You guys came through in a big pinch, and I really appreciate it. But thought that was really interesting. We all deal sometimes with folks that have a little bit lower credit scores. But it not only is it going to affect whether they can get a mortgage, it's going to affect them on the insurance side. So something that I'm going to really put in my processes now when I'm looking at a deal like that, I should know that to have them call you in advance, just
Yeah.
so that they're aware of the fact that they're going to be paying a higher premium if they don't choose a company like yourselves
Yeah.
that have the option of using companies that don't
Yeah.
use insurance companies.
And it doesn't always mean that the premium is going to be lower because they don't use credit score, but it's something that you want to make sure that you're looking into. You at least want to check with these carriers to make sure that you're getting quotes from them, because they're in this case it did make sense. So it's more like having availability to the options is very important.
Okay. So Ryan's always our go-to guy for insurance and insurance questions. He's helped us with the flood thing, which is still out there. And there's a lot of updates coming on that, so I'm sure you'll be back talking more about that when those things all get decided. So this week, if you're out there talking to first-time homebuyers, FHA, FHA 203K, VA loans, USDA loans, please think of me, Jim Cardinal, 281-0077. Ryan, they can reach you at
456-6688.
All right, thanks everybody. Make it a great week.